My expectation for this year was that fair value, which post-halving was going to be in the, 80,000-ish range, somewhere like that, would continue to accrete all the way to somewhere around 100K by where we are today. So to me, fair value is right around that 6-digit level. I figured we would blow through that 6-digit number, and then humans would human. The humans would come in and they'd start to lever up, and we'd see a parabolic move probably to 120, maybe even 150. This time in 25, it'll be April-ish, and that would kind of make sense, a year after the halving. So at that point, we'd hit that ebullient level. Then the question is,
the seasoned investor and cryptocurrency advocate Mark Yusko presents a convincing prediction for the future of Bitcoin. He predicts that Bitcoin's fair value post-halving could surge to around $80,000, with momentum potentially driving it to $100,000 in the near future. However, Yusko expects a parabolic rise reaching $120,000 or possibly $150,000 by April 2025, about a year after the halving of Bitcoin. As market players increase their leverage, the price may rise even further. Yusko, however, cautions that such heights are unlikely to persist and stays rooted in his long-term perspective. Using historical trends to emphasize Bitcoin's tendency to correct after parabolic moves, he predicts the start of a bearish phase, a crypto winter, by mid-2025. If you're fascinated by Bitcoin, cryptocurrencies, and the digital asset space, make sure to like this video, subscribe to the channel, and turn on post notifications for more content like this. Share your thoughts in the comments below. Thank you for watching and enjoy the video.
well, no, it was an accelerator. I think it was more the tail as opposed to the dog. I think the dog is the fact that there's new money coming into this market. The big buyers, right? Some of the other, global large owners continued to buy, and the ETFs just relentless buying. But if no one's willing to sell, then the bid has to keep coming up to encourage people to part with their Bitcoin. And I think that's what we're seeing now. I am still a believer that the 4-year cycle exists. I know there are some now saying that, because of Trump and because of the Bitcoin strategic reserve, and, there's going to be this massive movement toward accumulating Bitcoin and the 4-year cycle is going to go out the window. I'm going to bet that humans are going to human. So my expectation for this year was that fair value, which post-halving was going to be in the, 80,000-ish range, somewhere like that, would continue to accrete all the way to somewhere around 100K by where we are today. So to me, fair value is right around that 6-digit level. I figured we would blow through that 6-digit number, and then humans would human. The humans would come in and they'd start to lever up, and we'd see a parabolic move probably to 120, maybe even 150. This time in 25, it'll be April-ish, and that would kind of make sense, a year after the halving. So at that point, we'd hit that ebullient level. Then the question is, do we get the passage of the strategic Bitcoin reserve? Do we get, Tom Lee was on CNBC talking about this, saying that, the exchanges don't have enough Bitcoin on their platforms and people are going to be scrambling for it. Certainly possible. Could that push us well past that 150K range? It's certainly possible. If you think about a bell curve distribution, to me, the most likely is we get to fair value, we go to, call it 50% premium above fair value, so that's in that 150 range. And then, unfortunately, we have another bear market starting mid-year 2025, and we enter crypto winter again. Now, those who think that crypto winter is never going to come again, I'm pretty skeptical of that, personally. I mean, history is, it's interesting. I ask people this all the time. Look at parabolic charts. Show me one. And all I want to see is one. No one's ever been able to show me one. Show me a parabolic chart that goes parabolic and then goes flat. A new higher plateau. None of them do that, right? They go parabolic and they keep going parabolic, and then eventually they go down. So many people had their expectations built up positively for the halving, that you have this parabolic move right after the halving. And that clearly didn't happen. You saw a pretty meaningful sell down from 74,000 all the way down to 53,000. I think that caught a lot of people off guard. On the same day as the approval of the Bitcoin ETFs, the CME released a whole bunch of additional futures products that essentially increased the liquidity pool for people to take the opposite side, right? You can go short futures, you can go long the ETF, have a market neutral trade, but that constant selling in the futures market puts a cap on upward trajectory of prices and even could put downward pressure if somebody else piles on and goes naked short. So this downward relentless pressure finally dissipated in September, and we made this really rocket ship move all the way back to new all-time highs. And the nice thing is we've seen this accumulation pattern again, higher highs and higher lows.
He issues a warning that a significant spike in the price of Bitcoin would have consequences for the overall economy. A sizable switch in reserves from fiat money to Bitcoin might raise prices in a number of industries and possibly lead to inflation. This poses important questions regarding the demand for Bitcoin in the future and its place in the world economy. The global financial system structure may undergo significant changes if Bitcoin became widely accepted as a reserve asset, considering how intertwined the world's markets are. But that's not all. Please take a moment to like this video, subscribe to the channel, and click the notification bell for more in-depth analyses of macroeconomic and cryptocurrency trends. Now let's get back and hear what Mark Yusko has to say.
A $20 trillion market cap. So we just hit 2 trillion, or we're just under 2 trillion. A 10x from here means $20 trillion. Well, $20 trillion, what has to happen for this asset to be worth 20 trillion? So people have said it's digital gold, right? Well, all of the gold in the world above ground is like $12 trillion. Well, only half of that counts because half of it is jewelry and chalices and gold leaf and gold bars. That really doesn't count. Well, the gold bars do because they're part of the monetary base. The monetary value of gold is about 6 trillion. So we're a third of the way there already. So the idea that the monetary base, if Bitcoin is digital gold and it needs to replace the base layer of gold in central banks around the world, 6-ish trillion is plenty. Now, you say, but that's not all going to be owned by central banks because there's individual holders. Okay, well, those central banks have got to buy it from somebody. And those, sellers, people say, well, I'm never going to sell. Well, okay, but someone's got to sell for someone to buy. That's the way markets work. They can't make more out of thin air like fiat currency. So in that environment, Samson's point is interesting because if I'm a central bank and I say I have to buy 200,000 coins and Tom Lee says there's no one to sell it to me, well, then I got to keep bidding the price up. So could you see a parabolic move? Sure. But the problem I see with that is if the monetary aggregate base has to increase so much in order to displace gold, what does that do to overall prices of everything? Probably not a very good thing. And what does that do for overall economic activity? Probably not a very good thing. And then what does that do for future demand? So it's all interconnected. I was a little surprised. I thought Gensler had been very clear that he wasn't going to allow that to happen. But just like with the Bitcoin ETF, he didn't want that either. But eventually he had to relent. And I give the ETH people a lot of credit for getting that through. But to your point, a surprise was that there wasn't the same follow through in price. There was some demand for the ETF. And I think the reason for that is Bitcoin, digital gold, store of value, that mantra, I think is acceptable to big institutional investors, sovereign wealth, etc. The ETH use case, smart contracts, platform, toolkit, it's like, well, maybe, but what about this Solana thing? And what about this Avalanche thing? And what about these other things that I hear about that are better and faster and cheaper? And, so I just don't think there was as much universal acceptance of the use case and the investment thesis as there was for Bitcoin. We historically don't play in that area. And the reason is our funds, 70% of the money goes into equity of businesses that support the digital asset ecosystem. 30% goes into the liquid protocols themselves. But we tend to stay in the Bitcoin, Ethereum, Solana, Avalanche, Uniswap, things that we think have a long-term future, kind of the picks and shovels of the digital age. So I have historically been, pretty open-minded, but pretty anti things like XRP and Cardano and Hedera, because I couldn't see anyone building on them. I've been doing venture capital in the space for almost 7 years. I've never met a Cardano developer, not one. Now, I'm sure, and then somebody put out on the page, so, all you developers, call Mark. I still haven't gotten a call. So if you're out there, call me. I struggle with Ethereum a little bit because someone asked me the question. I thought it was a good question. He said, if Ethereum didn't exist and was invented today, would anybody use it? It's a very interesting question, right? It's more expensive and slower than the competitors. So if it didn't have this giant installed base because it was first, would people use it? I think the answer is no. It doesn't mean that everyone's going to bail on Ethereum. That's not my point, but it was an interesting perspective. So that explains why Solana and Avalanche and other things have done well.
Mark Yusko addresses the unexpected changes in the cryptocurrency market, especially with reference to the Bitcoin ETF. He considers how the Bitcoin ETF eventually passed despite early opposition from regulators such as Gary Gensler, and Yusko acknowledges the work of the teams that made it possible. He notes, nevertheless, that the price did not rise as anticipated following the approval of the ETF, which he blames to Bitcoin's strong reputation as digital gold and a store of value. Sovereign wealth funds and other large institutional investors often accept this narrative. However, there has been greater criticism over Ethereum's use case as a smart contract platform. Given the emergence of newer, faster, and less expensive competitors like Solana and Avalanche, Yusko thinks there is less widespread recognition of Ethereum's potential. He also discusses his own investing strategy, which is centered on businesses that support the ecosystem of digital assets and protocols like Solana, Avalanche, Ethereum, and Bitcoin that he thinks have long-term potential. He also criticizes Ethereum, arguing that its slower speeds and greater price relative to its more recent rivals may prevent it from becoming as popular if it were created today. He does, however, recognize that Ethereum has maintained its status due to its sizable and well-established user base. To wrap up the video, don't forget to like, subscribe, and turn on notifications to stay updated with similar content. By engaging with the video, viewers help improve the channel's visibility and growth through YouTube's algorithm. And as always, happy investing.